We analysed 120,000 auto submission policies last year, and you'd be surprised to hear that a staggering 32% of those triggered at least one risk flag in our system. Submission trust is a process of verifying risk at the beginning of a policy to ensure that the evidence there is backed before a policy is ever banned or issued.
Today, we are diving into the world of insurtech to discuss a systemic problem affecting every Canadian. The accuracy of the data that determines our insurance premiums is the problem.
Nobody's asking you to risk your entire business on this one piece of technology overnight. A good tech implementation should operate quite seamlessly in the background, and you can really see the return on investment.
Hi everyone, this is Maheen and welcome to the CanadianSME Small Business Podcast. Now today, we are diving into the world of insurtech to discuss a systemic problem that is affecting every Canadian. The accuracy of the data that determines our insurance premiums is the problem. And in 2026, the gap between a code and a bind is where the most critical decisions are made, yet it's often filled with inconsistencies. Joining us is Matt Roberts, a co-founder and COO of MyChoice, a veteran of digital strategy and performance marketing for brands like Apple and McDonald's. Matt is now leading an AI-enabled revolution in insurance. Through the Google for Startups AI Accelerator and the Guidewire InsurTech Vanguard program, he is spearheading the creation of the submission trust layer that ensures risk data is verifiable and accurate before an insurance policy is ever issued. Lots to discover today, so without a further ado, let's dive in. Matt, it's a pleasure having you on the show today. Welcome to the podcast. How are you?
Great. And yourself?
Very well. Thank you for asking. Now, Matt, as I mentioned in Intro as well, we are kind of here to discuss a very crucial topic, and we'd love to open this discussion by understanding the hidden risk in online coding. Online coding has made insurance, faster, but you found that a massive portion of the risk data being submitted is actually misrepresented. So tell us, why are insurance codes often inaccurate, and how does soft fraud enter this process?
Yeah, so, that's a great question to start with, and one that we get a lot. To begin with, there's a massive blind spot within the insurtech industry right now. And recently, there's been a lot of focus towards downstream automation when it comes to innovation. So, things like claims processing and renewals. However, what we've seen is that there's an issue within itself at the customer journey, so right at the beginning of that, and it starts with the online quote. So today, more than 50% of submissions to a carrier's platform starts via a broker channel,
Right.
and that begins, usually with an online form. So a user is on a website, and they'll do answer some simple questions about themselves and their driving history. And then they'll receive a highly competitive price. I'm sure you've obviously done that and seen that. But the thing with this is that this price relies quite heavily on this initial quote, relies quite heavily on that initial data and something, called like the honor system. And that's where soft fraud enters the picture. So just to quickly define that for you, we have hard fraud, which is criminal. So, staged accidents, or intentional property damage. And soft fraud, on the other hand, is your everyday customer who is just essentially trying to tweak the facts to save a bit on their premium, basically.
Right.
So to give you a sense of the scale, we analysed 120,000 auto submission policies last year within our platform. And you'd be surprised to hear that a staggering 32% of those triggered at least one risk flag in our system alone. Historically, Verisk, a company out of the US, they did a study, and they found that 14% on average of all policies had some sort of premium leakage due to misstated underwriting information.
Right.
So just to give you a bit of a real world example of what that looks like, we did a back book audit last year within our system, and within just one policy alone, we saw that a misstated claim had a premium leakage equivalent to $1,000. So that alone, you can imagine multiplied across a book of business, can get astronomical, and it really highlights the amount of risk that these carriers are taking on board that they're not necessarily being paid for. So yeah, that's roughly kind of how software would enter the picture.
Realizing that these edge cases, they're actually the systemic explains why the industry is struggling so much with efficiency and rising costs. Now, Matt, let's explore how submission trust strengthens the validation right at the point of entry.
Yes.
Please tell us, what is submission trust and why is fixing bad data at entry better than catching it?
Yeah, so submission trust is about building a highly intelligent, fortified front door for insurance carriers. It's the process of verifying risk at the beginning of a policy to ensure that the evidence there is backed before a policy is ever banned or issued. And then to understand why this is so critical, we have to look at the current process of things, which is, to be honest, quite frankly, very manual and reactive. So just to break that down from a broker's perspective, we have, these, what we like to call stare and compare exercises. So when it comes to a submission, an insurance submission, they're doing a stare and compare from one screen to the next. So they might have a motor vehicle record open on one screen and a carrier portal on the other, and they're literally trying to spot the discrepancies between two screens. So, not the most efficient use of their time. And then from the carrier perspective, they have this 60-day underwriting window where they can frantically find and fix errors post-bind. So that alone means a lot of back and forth after the submission. So also, again, not really such a smooth process. And you'd be surprised to hear that despite all this effort, only about 5% of policies post-bind are even audited. So a lot of risk still goes unaccounted for. So that's why it's really important to, fix this data entry at the input level at the beginning of the process. And so we replace that 5% reactive post-bind with 100% pre-bind validation. And that really creates a win-win-win across the board for the user, for the carrier, and the broker. So just to get into each of them quickly, for the user, they get a true rate up front to start with, and they are fully indemnified if disaster happens, if there's an accident, if they need to submit a claim. They're ensured that the data won't be contested because it's evidence backed from the start. And then from the carrier's perspective, they're essentially, collecting the premium that they should be collecting from the start. So charging what they should be from the beginning. And then lastly, from the broker perspective, it just creates, an ease of doing business. The data, when it enters the system, is pristine from the beginning. Quote to bind times increase, so roughly by about 80%. There's minimal to zero reworks required. So essentially, it's just improving that whole lack of operational inefficiency from beforehand.
Right. So validating evidence in real time, it really ensures that insurers can issue policies with total confidence while really eliminating the need for expensive manual work. So thank you for kind of, letting us walk through how do we fix this input layer in the first place. Now, Matt, let's understand the AI beyond the chatbot, right? Tell us what challenges come beyond modernizing the legacy systems, and why hasn't the insurance industry solved this problem already?
Yeah, so the short answer is historically you have the digital quoting the front end, and then the manual underwriting back end. So the digital quoting front end, that wants to be very fast, and the manual underwriting back end wants to be extremely accurate. But the problem between those things is that they live in completely different silos, and bridging that gap for IT has been a massive headache. So these insurance carriers live on these complex legacy systems. So if you walk into any carrier's office now and you have an amazing tech solution, but it requires a 2-year integration roadmap, there's simply no bandwidth for that. And to be honest, you'll get laughed out the door.
Right.
Yeah. And then another major challenge is trust. So the insurance industry still relies quite heavily on PDF documents. So, to give an example, something like a letter of experience from a previous policy. And you might look to make your workflows easier by looking to pass out these unstructured documents by using AI or automation. But the problem with that is an underwriter simply can't stand behind a blind box that says bind this or bind that. They have to be able to defend the decisions for, the rule for what's being done, not only for their brokers and their team, but also for regulators as well.
Right.
So from that standpoint, that's why we focused on explainable integration from the get-go. So when our platform flags a submission, we write back we provide total transparency and write back directly into the carrier's system. So we provide the rule ID or the issue that was triggered, the data sources referenced, and then I think most importantly the estimated premium leakage, so that dollar amount of estimated cash left on the table, so to speak. So, we're actively proving this model, this integration right now. We were recently selected into the InsurTech Vanguard program by Guidewire. And for those that aren't familiar with Guidewire, essentially they're a system of record for the P&C, insurance P&C market. They hold around 90 to 95% of the market. So by leveraging this relationship, we're hoping to partner with a company to provide our technology and operate kind of seamlessly, invisibly in the background, and interact with these existing core legacy systems that carriers rely on today.
Right. Now moving towards real-time decision support really allows the entire insurance ecosystem to operate with more transparency and much better loss ratio. So thank you for highlighting that, Matt. To all the brokers and insurers that are watching, in 2026, good enough data is a liability. So if you're relying on post-bind audits to catch discrepancies, then you're already losing money. Matt's work with MyChoice proves that that a submission trust layer can identify 1,000 premium difference on a single policy before it's even issued. So whether you're using their new ChatGPT integrated shopping experience or their underwriting platform, the goal is to reduce leakage without really raising premiums for honest customers. So please don't let manual rework kill your margins. It's really time to put your data to work. We'll take a quick break right here. Please don't go anywhere, because up next, we'll explore how AI is completely reshaping the way Canadians shop for insurance.
Hey, you think you know UPS? Yeah, that's us. Everybody knows that. You know what you didn't know? This. Okay, try to keep up. Ocean, us. Ground, rail, air, so us. Guess who? Us. Customs cleared, borders cleared, done. Us. Still with me? Wait for it. Boom. Us. Intelligent, automated, fulfillment. Us. Yep. Healthcare too. Digital your thing? Yeah. Well, book it, ship it, track it. You feeling me yet? Yep, that's all us. That's all UPS.
Welcome back, everyone. Let's explore how conversational AI is reshaping how Canadians shop for insurance. To tell us, how can insurers improve loss ratios without really raising premiums?
Yeah, so get this all the time. It's arguably one of the most urgent conversations happening right now in carrier boardrooms. And just to paint the picture a bit, there's often regulatory lag when it comes to raising premiums. So because of this, carriers are forced to look internally. And one of the best, most sustainable levels that they can pull is to attack premium leakage and combat fraud. So if you go back to that Verisk stat that I mentioned in my first question about 14% of all policies within the US, auto insurance policies within the US, have some sort of misstated underwriting information. It really signifies the massive amount of money that's being left on the table. So, you have these fraudsters who are actively, being deceiving or intentionally doing wrong, and they're pushing up loss ratios for the carriers. And then naturally, these carriers are forced to pass along these costs to the good drivers, which is, unfair. And they end up footing the bill as well.
Right.
Yeah, so we learned the sheer scale of this by deploying our technology across one of the largest Canadian P&C brokerages last year. And when you use a submission trust layer, you ensure that you're charging the accurate premium for the actual risk. So, if a consumer has a misstated claim, or, they've forgotten to disclose an accident or something along those lines, by doing it beforehand, you ensure that by using the submission trust layer, you ensure that you are catching it, pre-bind. And it also means that the premium is adjusted to reflect reality. And I think as well, it means that carriers aren't, having to raise rates across the board, because, they can charge for what they should charge from the get-go, and catch these high-risk drivers from the beginning.
Right.
Yeah. So we've processed around 500 million in gross written premium through our validations, through our validation engines now. And from what we can see, the math is quite clear that when you fix the inputs, premium leakage stops. There's minimal to zero reworks required, so costs for that plummet. And ultimately, at the end of the day, the main key performance indicators are trending in the right direction.
Really, the future of insurance shopping is going to evolve, as you rightfully said, Matt. And bridging this gap between a simple conversation and a verifiable legal submission is quite the next frontier of the consumer experience. Finally, let's look at how leadership and innovation are reshaping traditional insurance models. How will conversational AI change insurance shopping?
Yes, timely question as well. So I think, conversational AI is going to completely upend the top of the funnel when it comes to insurance shopping. And right now we're in the process of launching the first insurance shopping experience in Canada within ChatGPT. So what I mean by that is you can interact in the app, and you're going to be able to get real car insurance or life insurance quotes without having to interact with a traditional web form. So, but it goes far beyond just ChatGPT. Eventually, these services are going to be indexed across many different large language models, whether it's Claude or, an MCP server. And a website is going to be able to be visited by an AI, and they're going to be able to just retrieve a quote for you. So, with this, it's opening up a whole new frontier. It's for insurance shopping online. It's like, untapped potential, really. It kind of is quite reminiscent of the early days of digital marketing for me. So whether that's like Google AdWords in the early 2000s or the App Store in 2007, it feels like we're really at the start of this journey. I think also as well, just looking at it from carriers' perspective, it creates a massive paradox for them. Because if you recall, I mentioned we found that 32% of policies submitted via a traditional web form triggered at least one risk flag in our system. So that begs the question, how many more risk flags will be triggered by having a natural conversation with AI? I think there's really going to be an increased likelihood that people do tend to forget like a previous accident they had, or they misstate the amount of kilometers it takes to drive to work. The likelihood of some sort of misrepresentation there does go through the roof. So for this to work, I think if you're going to plug conversational AI into your quoting engine, you do need some sort of safety net, because otherwise you're going to be ingesting large amounts of bad data. And that's why, carriers are going to need some sort of robust submission trust layer acting like a bouncer at the front door, almost validating what is coming in to ensure that the facts match reality. Yeah, so it's going to be interesting, but that's typically how I see it unfolding.
Well, thank you so much for highlighting how do we modernize a legacy industry, really. And you're right, demonstrating that smarter workflows lead directly to improved profitability is quite the ultimate argument for modernizing this industry. This was a great conversation. Thank you so much for shedding light on such an important topic, which is pretty much every Canadian's, problem at the moment.
Yes.
As we wrap up now, Matt, what advice would you give to brokers or insurers that are really hesitant to adopt the latest technology due to complexity?
Yeah. So I guess just to preface this a bit, one thing we've noticed, certainly in Canada and especially in the insurance industry, is that nobody wants to be a first mover. Everybody wants to be a fast follower. And my advice would be to just, forget that mentality, change it. When it comes to tech, you don't need to reinvent your entire business overnight. You just have to be willing to take a step forward and look at your operations or those manual mind-numbing tasks that exist right now within your business. So, for example, from a broker and carrier standpoint, you can go back to the stare and compare example that I mentioned earlier. You've got these highly paid workers that could be, their time could be better off spent doing something else.
Right.
So I think once you've found this problem, you can then look to apply it at a localized level. So nobody's asking you to risk your entire business on this one piece of technology overnight. You can focus it on perhaps a subset of insurance policies or within a test environment, and then a good tech implementation like this should operate quite seamlessly in the background. And I think once you kind of set it up like that, you can really just see the return on investment, and then ultimately let the success kind of drive your broader technology strategy. So that's the way I would look at it, and that's I think makes the most sense.
That is a great reminder, really, that the best technology is the kind that removes the friction rather than adding to it. Thank you so much, Matt, for joining us and for sharing such great expertise and your vision. Thank you.
No problems. Thanks for having me.
And that was Matt Roberts from MyChoice Financial Inc., a masterclass on how to build submission trust and use AI to fix the input layer of one of Canada's most essential industries. Thank you so much for tuning into the podcast. Please be sure to subscribe and visit CanadianSME.ca for more resources. A special shout out to our partners, UPS and ADP, for their ongoing commitment to empowering small businesses across Canada.